Based on the historical data and forecast, Bitcoin has shown volatility but a general upward trend. The RSI consistently stays within the 41.7 to 52.0 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening and contracting, suggesting periods of increased and decreased volatility. The support price remains stable at $81,100, while the resistance fluctuates around $85,100. Considering these factors, I propose a strategy focusing on short-term pullbacks to capitalize on the upward trend. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. The strategy involves waiting for the price to approach the lower Bollinger Band and RSI to dip below 45. This indicates a potential pullback. For example, on April 4, 2025, the forecast price is $82,200, and the RSI is predicted to be below 45. Enter a long position at $82,200. Set a stop-loss order at the support price of $81,100. The initial target price will be the resistance price of $85,100. If the price reaches $85,100, consider taking partial profits and adjusting the stop-loss to break even. This strategy combines the momentum of the RSI, the volatility of the Bollinger Bands, and the stability of the support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bitcoin Cash has shown a volatile trend with periods of both upward and downward momentum. The RSI consistently remains below 80, indicating the asset is not currently overbought. However, the recent dip in RSI towards 37.0 suggests a potential oversold condition. Considering the forecast for the next week, which predicts a price range between $294 and $300, and the support price of $292, I propose a cautious long strategy. We will enter a long position at $294, placing a stop-loss order at $289 to limit potential losses. The initial target price will be $308, aiming to capitalize on a potential rebound. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is near the lower band, further supporting the oversold condition. If the price bounces and touches the middle band around $322, we'll adjust the target price to $330. This combined RSI and Bollinger Bands approach provides a layered risk-reward profile. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support price strategy to ensure a balanced and adaptive approach to maximizing returns while managing risk. Based on the historical data and forecast, STRK shows a downtrend. The price has been consistently decreasing from $0.724 to a forecast of $0.545 over the past 2 weeks. The RSI values are generally below 50, indicating a bearish momentum, with recent values hovering around $37, suggesting it is in the oversold territory. The Bollinger Bands are narrowing, which could signal a potential breakout. Considering the support price of $0.573 and the forecast, I recommend a short position strategy. The entry price should be $0.579, with a stop-loss placed at $0.581 to protect against a potential reversal. The initial target price should be $0.557, aiming to capitalize on the expected downward movement. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. When the price touches the lower band and the RSI is below 30, it is a strong sell signal. Therefore, I suggest entering a short position at $0.579. A tighter stop-loss is crucial, set at $0.581. The first target should be $0.557, aligning with the forecast. If the price reaches $0.557 and the RSI is still below 40, consider a second target at $0.547. Finally, if the price continues to fall and the RSI drops below 30, a final target of $0.543 can be considered. This layered approach allows for maximizing profit while managing risk effectively. Based on the historical data and forecast, Ethereum shows a downtrend. The price has been consistently declining from March 21, 2025, and the forecast suggests continued downward pressure. The RSI consistently below 50 indicates a weakening momentum, and the recent readings around 34 to 38 confirm oversold conditions. Considering the support price of $1,790, we will implement a contrarian strategy, anticipating a potential bounce. We will enter a long position at $1,780, placing a stop-loss order at $1,750 to limit potential losses. Our initial target price will be $1,820, aiming to capitalize on a short-term rebound. To refine this strategy, we will incorporate the Bollinger Bands. The current price is near the lower band, suggesting a potential for a short-term reversal. If the price breaks below the lower band and continues to fall, we will exit the position. If the price approaches the upper band, we will consider taking profits or tightening our stop-loss. This combined approach, utilizing RSI and Bollinger Bands, should provide a balanced and adaptable strategy for navigating the current downtrend of Ethereum. The portfolio will be 60% long position at $1,780 with a stop-loss at $1,750 and a target price of $1,820, and 40% in cash for flexibility. Based on the historical data and forecast, XRP shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently dips below 50, indicating weakening momentum, and the forecast prices are nearing the support level of $2.02. Considering these factors, I recommend a short position strategy. The entry price should be $2.06, coinciding with the first forecast price. A stop-loss should be set at $2.09, just above the recent bottom of the Bollinger Bands and slightly above the support price, to limit potential losses if the price unexpectedly reverses. The target price should be $1.96, aligning with the lowest forecast price and providing a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, it signals a potential shift in trend, and the position should be closed. The RSI reading of $39.9 on March 31 and April 1 suggests the asset is approaching an oversold condition, reinforcing the short position. This strategy balances risk and reward, capitalizing on the predicted downtrend while incorporating safeguards against unexpected price movements. The overall portfolio should allocate 60% to this short position, 30% to a conservative hold, and 10% to a high-risk speculative play, diversifying the portfolio for optimal returns. Based on the historical data and forecast, Binance Coin demonstrates a downtrend, with the forecast prices consistently below the recent closing prices. The support price has remained stable at $590, while the resistance fluctuates. Considering the RSI values, which have generally been below 60, indicating a lack of strong momentum, and the Bollinger Bands showing volatility, a short selling strategy is warranted. We will implement a tiered approach. Initially, short at $611 with a stop-loss at $617 and a target price of $590. If the price retraces and touches $601, we will add another short position with a stop-loss at $606 and a target price of $590. To refine this strategy, we will incorporate the Bollinger Bands. When the price approaches the upper band, it signals potential overbought conditions. Therefore, if the price reaches $636, we will initiate a short position with a stop-loss at $642 and a target price of $590. Conversely, when the price touches the lower band, it suggests an oversold condition, and we will avoid shorting. This combined approach, utilizing RSI, Bollinger Bands, and support/resistance levels, aims to maximize returns while mitigating risk. The portfolio will prioritize the shorting strategy when the price is near the upper Bollinger Band or above the resistance level, and the RSI is below 60. Based on the historical data and forecast, Stellar exhibits a downtrend with periods of consolidation. The support price consistently remains at $0.258, while the resistance fluctuates around $0.346. The RSI values have been oscillating between 39.6 and 52.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting potential volatility. Given this analysis, I propose a contrarian strategy focusing on short-term opportunities. We will utilize a combination of RSI and Bollinger Band signals to identify potential entry and exit points. My recommended strategy involves a long position when the RSI dips below 40 and the price touches the lower Bollinger Band, indicating an oversold condition. For example, on April 3, 2025, the RSI was 39.6 and the price was near the lower Bollinger Band of $0.255. Entry price will be $0.255, with a stop loss at $0.245 and a target price of $0.28. If the price breaks below the support level of $0.258, we will exit the position. Conversely, if the RSI reaches 80 and the price touches the upper Bollinger Band, we will take a short position with an entry price of $0.296, a stop loss at $0.308, and a target price of $0.27. This combined strategy aims to capitalize on short-term price fluctuations while managing risk through defined stop-loss levels. Based on the historical data and forecast, Toncoin shows a fluctuating trend with periods of both upward and downward momentum. The RSI values indicate that the asset has recently been oscillating between neutral and slightly overbought conditions. The Bollinger Bands suggest periods of increased volatility, with the price occasionally touching the upper band, indicating potential overbought scenarios. Given the support price of $3.45 and the forecast price starting around $3.78, I propose a strategy focusing on short-term gains with moderate risk. The strategy involves entering a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, suggesting an oversold condition. Specifically, I recommend entering a long position at $3.74. Place a stop-loss order at $3.45, just below the established support level, to limit potential losses. Set a target price at $4.09, aligning with the recent upper Bollinger Band resistance. This strategy combines RSI and Bollinger Band signals to capitalize on short-term price bounces. The anticipated forecast price of $3.78 on April 4, 2025, provides an initial entry point, and the subsequent forecast prices suggest a potential upward trajectory toward the $4.09 target. This balanced approach aims to achieve high returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast prices for the next week are also declining, reinforcing the bearish outlook. Therefore, I recommend a short-selling strategy with a focus on capitalizing on the downtrend. We will enter a short position at $0.653, placing a stop-loss order at $0.673 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.635, aiming for a modest profit within the near-term forecast period. To refine this strategy, we'll incorporate the RSI and Bollinger Bands as secondary confirmation signals. If the RSI dips below 40, it signals an oversold condition, which could be a good entry point for a short position. Conversely, if the price touches the bottom of the Bollinger Bands, it might suggest a potential bounce, warranting a cautious approach. The portfolio will prioritize the short-selling strategy, with adjustments based on the RSI and Bollinger Band signals. If the price reaches $0.635, we will consider taking profits and potentially re-evaluating the position based on updated technical indicators and market conditions. Based on the historical data and forecast, Litecoin exhibits a clear downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement. The support price of $81.5 provides a key level to watch. The RSI values, fluctuating between 32.2 and 44.0, suggest periods of both oversold and overbought conditions. The Bollinger Bands show that the price is nearing the lower band, indicating potential for further decline. Considering these factors, I recommend a short position strategy. Enter a short position at $83.5, with a stop-loss placed at $86, just above the resistance level. The initial target price is $77, aligning with the forecast for April 9, 2025. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it strengthens the short signal. If the price reaches $77, consider taking partial profits and moving the stop loss to break even. If the price retraces towards the upper Bollinger Band or the RSI reaches 60, it signals a potential trend reversal, and the position should be closed. This blended approach combining trend analysis, RSI, and Bollinger Bands aims to maximize returns while managing risk effectively. Based on the historical data and forecast, STRK shows a slight upward trend with volatility. The RSI fluctuates between 41 and 57, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, with recent prices approaching the lower band, suggesting potential support near $2.21. The forecast for the next week predicts a downward movement, with prices ranging from $2.3 to $2.21. Considering these factors, I propose a cautious long position strategy. The entry price should be $2.21, coinciding with the forecast low and the lower Bollinger Band. A stop loss should be set at $2.16, just below the established support level to mitigate potential losses. The initial target price is $2.29, aligning with the recent resistance level. If the price reaches $2.29, consider moving the stop loss to the entry price of $2.21 to secure profits and protect against a potential reversal. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, APTUS shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently below 50 and nearing oversold territory, around 40, suggests the asset is undervalued. The Bollinger Bands also indicate a contraction, which often precedes a significant price movement. My strategy combines RSI, Bollinger Bands, and support/resistance levels for optimal returns. I recommend a short position at $5.2, capitalizing on the downward trend. A stop loss should be set at $5.3 to protect against a potential reversal, and a target price of $4.95, aligning with the forecast and the lower Bollinger Band. To refine this strategy, I will incorporate a layered approach. Initially, enter a short position at $5.2 with a stop loss at $5.3 and a target at $4.98. If the price reaches $4.98, I will partially close the position and set a new target at $4.95. This layered exit strategy allows for capturing profits as the price declines while mitigating risk. The support level of $5.06 will act as a secondary confirmation for the short position, reinforcing the downtrend. This portfolio provides a high probability, high return investment opportunity in APTUS. Based on the historical data and forecast, SE shows a downtrend, especially with the forecast indicating a continuous decline. The RSI consistently stays below 50, indicating a weak upward momentum. The Bollinger Bands are contracting, suggesting decreasing volatility. Considering these factors, I recommend a short selling strategy. The entry price should be $0.163, coinciding with the forecast price on April 4, 2025. A stop loss should be set at $0.172, just above the upper Bollinger Band on March 28, 2025, to limit potential losses if the price unexpectedly reverses. The target price should be $0.151, aligning with the forecast price on April 10, 2025, representing a substantial profit potential. To refine this strategy, I suggest incorporating the support price as a secondary confirmation point. If the price breaks below the support level of $0.164, it further validates the downtrend, and the short position should be opened. If the price rebounds to $0.176, the stop loss should be moved to break even to secure profits. This combined strategy leverages both technical indicators and support levels to maximize returns while minimizing risks. This portfolio is the most efficient because it utilizes the most information to create a position strategy. Based on the historical data and forecast, Ethereum Classic exhibits a downtrend. The price has consistently been below the upper Bollinger Band and the RSI has been mostly below 50, indicating weakening momentum. The forecast for the next week predicts a continued decline, with prices falling to $15.5. Given this bearish outlook, I propose a short selling strategy. We will enter a short position at $16.3, placing a stop-loss order at $17.1 to protect against unexpected upward movements. Our initial target price will be $15.5, aligning with the forecast. To refine this strategy, we will incorporate the RSI indicator. When the RSI falls below 35, it signals an oversold condition, potentially indicating a short-term bounce. If the price rebounds to $16.8 after entering the short position, we will adjust our stop-loss to the entry price of $16.3, securing a profit and mitigating further losses. If the price continues to decline and reaches $15.5, we will take profit and exit the position. This combined approach leverages both trend analysis and RSI signals for enhanced risk management and potential for high returns. Based on the historical data and forecast, Polygon exhibits a clear downtrend. The price has been consistently declining, and the forecast for the next week projects further decreases, reaching as low as $0.172. The support level remains firm at $0.186, acting as a potential floor. The RSI consistently remains below 50, indicating a bearish momentum. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.204, placing a stop-loss order at $0.235, just above the upper Bollinger Band to protect against unexpected upward spikes. The initial target price is $0.186, aligning with the established support level. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30, it signals an oversold condition, which could be a potential entry point for a short position. Conversely, when the price touches the lower Bollinger Band, it suggests a potential bounce, which should be considered as a stop-loss trigger. If the price reaches the $0.186 target, we will secure profits. If the price rebounds and hits the $0.235 stop-loss, we will exit the position. This combined approach leverages both momentum and volatility indicators for a more robust trading strategy. Based on the historical data and forecast, AEVO exhibits a clear downtrend. The price has been declining from $0.122 on March 21, 2025, to a forecast of $0.0868 on April 10, 2025. The support price remains consistently at $0.0977, while the resistance is at $0.114. The RSI consistently falls below 50, indicating a bearish sentiment, and frequently dips into oversold territory below 30, suggesting potential for a short-term bounce before the downtrend continues. The Bollinger Bands show the price nearing the lower band, further reinforcing the downtrend. My recommended strategy is a short position with an entry price of $0.0997 on April 4, 2025. A stop-loss should be placed slightly above the resistance at $0.115 to protect against a potential short-term reversal. The initial target price should be set at the support level of $0.0977, aiming to capitalize on the existing downtrend. To optimize returns, I suggest a layered approach. If the price reaches the initial target of $0.0977, consider scaling in additional short positions at $0.0981 and $0.0955, each with a reduced position size and a stop-loss adjusted to break even. The final target price should be the forecast low of $0.0868. This strategy combines RSI, Bollinger Bands, and trend analysis to maximize potential profits while managing risk effectively. The consistent downtrend and oversold RSI readings provide a strong foundation for a short position, while the layered approach allows for adaptation to changing market conditions. Based on the historical data and forecast, optimism shows a downtrend. The support price is consistently at $0.701, and the forecast indicates further decline towards $0.636. The RSI fluctuates between 33.1 and 47, indicating neither strong oversold nor overbought conditions currently. The Bollinger Bands show that the price has been trending below the moving average, suggesting a bearish momentum. Therefore, I recommend a short position strategy. Entry price should be set at $0.702, with a stop loss at $0.736 to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.667, aligning with the forecast. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. If the RSI falls below 20, indicating an oversold condition, consider covering the short position. If the price touches the lower Bollinger Band, it might signal a potential bounce, and a partial profit taking could be considered. However, given the overall downtrend, the primary strategy remains shorting. Adjust the target price to $0.636 if the price continues to decline as forecasted. The portfolio will prioritize the short strategy with a stop loss and target price based on the forecast and technical indicators. Based on the historical data and forecast, STRKnet is exhibiting a downtrend. The price has been consistently falling, and the forecast for the next week projects further declines. The RSI consistently indicates oversold conditions, hovering around 30 to 40, suggesting potential for a temporary bounce, but the overall trend remains bearish. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is trading near the lower band, reinforcing the bearish sentiment. Therefore, I recommend a short selling strategy. The entry price should be $0.136, placing the stop loss at $0.148 above the entry price to protect against a potential short-term reversal. The target price is set at $0.121, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we can incorporate RSI and Bollinger Bands signals. When the RSI falls below 20, it signals an extremely oversold condition, potentially indicating a short-term bounce. However, given the prevailing downtrend, we can use this as a confirmation point to enter a short position. When the price touches the lower Bollinger Band, it suggests a potential support level, but in this case, the support price is $0.135, so we can consider it as a potential entry point. Combining these indicators, I suggest entering a short position at $0.136, setting a stop loss at $0.148, and aiming for a target price of $0.121. This strategy balances risk and reward, capitalizing on the downtrend while protecting against unexpected price movements. Based on the historical data and forecast, Solana shows a downtrend. The RSI consistently hovers below 50, recently hitting 37.1 and 37.2, indicating oversold conditions. The forecast for the next week projects further declines, with prices falling to $112. The support price remains steady at $117, while the resistance fluctuates around $125. Considering these factors, I recommend a short position. Enter a short position at $126, placing a stop-loss order at $129 to protect against a potential reversal. The initial target price is $117, aligning with the support level. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, the overall downtrend and bearish forecast outweigh this signal. If the price retraces to the middle band around $130, consider tightening the stop loss to $131. If the price reaches the target of $117, take partial profits and move the stop loss to break even. This approach balances risk and reward, capitalizing on the prevailing downtrend while mitigating potential losses. Based on the historical data and forecast, Jupiter is currently in a downtrend, with a consistent decline in price over the past 2 weeks and a forecast predicting further decreases. The RSI consistently remains below 50, indicating a bearish momentum, and has recently dipped below the oversold level of 20 on April 3, 2025, at 28.0. Considering this, I recommend a contrarian strategy aiming for a bounce from the support level. Our entry price will be $0.378, coinciding with the established support price. To manage risk, we'll set a stop loss at $0.355, just below the forecasted price for April 9, 2025. Our target price will be $0.423, near the previous resistance level, providing a potential 4.5% gain. To refine this strategy, we'll incorporate Bollinger Bands. The price is consistently near the lower band, suggesting potential for a rebound. If the price breaks below the lower Bollinger Band, we will exit the position. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on the potential for a short-term reversal while mitigating downside risk. The overall portfolio will prioritize this contrarian strategy due to the strong bearish signals and the potential for a high-reward bounce from the support level. Based on the historical data and forecast, Render has shown volatility within a range of $3.28 to $4.04. The RSI indicates that the asset has been fluctuating between oversold and overbought levels, currently around 44.6, suggesting a neutral to slightly bullish momentum. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. My strategy involves a combination of RSI and Bollinger Bands. I suggest a long position with an entry price of $3.43. The stop loss should be set at $3.28, just below the support level, to protect against significant downside risk. The initial target price is $3.73, aligning with the recent resistance level. If the price reaches $3.73, we can consider moving the stop loss to break even to secure profits and potentially ride further upward momentum. Given the forecast data, the price is expected to remain around $3.4, so a conservative approach is warranted. This strategy aims to capture short-term gains while managing risk effectively. Based on the historical data and forecast, Solana name service shows a clear downtrend. The RSI consistently remains below 50, indicating a weakening momentum. The forecast predicts further price declines, with prices dropping from 0.0844 to 0.0682 over the next week. Considering these factors, I propose a short selling strategy. We will enter a short position at 0.0844, placing a stop-loss order at 0.0966 to protect against a potential reversal. The initial target price will be 0.0714, aiming to capture a significant portion of the predicted decline. To refine this strategy, we will incorporate Bollinger Bands. If the price touches the upper Bollinger Band, we will tighten our stop-loss to 0.0889. If the price breaks below the lower Bollinger Band, it suggests a strong downward momentum, and we will adjust our target price to 0.0682. This dynamic adjustment based on Bollinger Bands will allow us to maximize profits while minimizing potential losses. This combined RSI and Bollinger Bands approach offers a robust and adaptive strategy for capitalizing on the current downtrend of Solana name service. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend. The price has been fluctuating between a support of $0.151 and a resistance of $0.167 for the past 2 weeks, and the forecast suggests a continued decline towards $0.156. The RSI is currently around 40, indicating a neutral to slightly oversold condition, while the Bollinger Bands show that the price is approaching the lower band, suggesting potential for a downward movement. Considering this, I recommend a short position strategy. The entry price for this short position should be $0.163. A stop loss should be placed at $0.167 to protect against a potential upward reversal. The initial target price should be $0.157, aligning with the forecast and the lower Bollinger Band. If the price reaches $0.157, we can reassess the situation and potentially set a second target price at $0.156, based on the forecast. This strategy combines trend analysis, RSI signals, and Bollinger Band confirmation to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PEPE demonstrates a slightly bearish trend with decreasing values in the forecast period. The RSI fluctuates between 42.4 and 57.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price volatility, with the price frequently touching the upper and lower bands. Considering these factors, a conservative strategy focusing on short-term movements and risk mitigation is advisable. I propose a strategy combining RSI and Bollinger Band signals, with support and resistance levels as additional confirmation. The strategy involves a combination of three approaches. Firstly, when the RSI falls below 30, indicating an oversold condition, we enter a long position at $0.00000670. The stop loss is set at $0.00000630, just below the support level, and the initial target price is $0.00000710, near the resistance level. Secondly, when the price touches the lower Bollinger Band, we enter a long position at $0.00000640, with a stop loss at $0.00000630 and a target price of $0.00000710. Thirdly, when the RSI rises above 70, indicating an overbought condition, we enter a short position at $0.00000690, with a stop loss at $0.00000710 and a target price of $0.00000670. We will prioritize the RSI signals, as they provide more precise indications of potential reversals. This combined approach aims to capitalize on short-term price fluctuations while minimizing risk through strategically placed stop-loss orders. Based on the historical data and forecast, SHIB Inu shows a slightly decreasing trend. The price has been fluctuating within a narrow range between $0.000120 and $0.000130, with support consistently at $0.000120. The RSI indicates that the asset is generally in a neutral zone, fluctuating between 40 and 57, not strongly oversold or overbought. The Bollinger Bands have been narrowing, suggesting decreasing volatility. The forecast for the next week projects a further decrease, with prices expected to hover around $0.000120. Considering these factors, a conservative trading strategy focusing on short-term movements is recommended. Therefore, I suggest a strategy combining RSI and Bollinger Bands. We will enter a long position when the price touches the support level of $0.000120 and the RSI dips below 40. The entry price will be $0.000120. A stop-loss order will be placed just below the support level at $0.000118 to protect against a significant downturn. The target price will be set at the resistance level of $0.000130, aiming for a modest profit. This strategy aims to capitalize on potential short-term rebounds while mitigating risk through careful stop-loss placement. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Doge-Coin is currently in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week indicates further downward pressure. The support price is consistently at $0.375, acting as a floor. The RSI has been fluctuating below 50, indicating weakening momentum. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given these factors, I recommend a short selling strategy. We will enter a short position at $0.403, placing a stop-loss order at $0.426 to limit potential losses if the price unexpectedly reverses. Our target price will be $0.355, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands, it confirms a strong selling opportunity. The combined signals provide a higher probability of success. Therefore, we will refine our entry price to $0.382 when both conditions are met. The stop loss will remain at $0.426, and the target price will be $0.355. This combined strategy offers a high probability, high reward opportunity given the current market conditions and technical indicators. Based on the historical data and forecast, Doge-Coin exhibits a downtrend, particularly evident in the recent forecast period where prices are projected to decline further. The RSI consistently hovers below 50, with periods dipping into oversold territory, below 40, suggesting weakening momentum. The Bollinger Bands show a contraction, indicating decreasing volatility, but the price is nearing the lower band, reinforcing the bearish outlook. Given this, I recommend a short selling strategy with a focus on capitalizing on the anticipated downward movement. Specifically, I propose entering a short position at $0.00213. The stop loss should be set slightly above the upper Bollinger Band at $0.00278 to protect against unexpected upward spikes. The initial target price is $0.00193, aligning with the forecast price for April 10, 2025. If the price continues to decline, a second target can be set at $0.0019. This strategy combines the bearish trend, oversold RSI, and Bollinger Band analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Near Protocol shows a downtrend with a recent dip and potential for further decline. The RSI consistently hovers around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. However, the forecast price predicts a continuous decrease, reaching as low as $2.39. The support price of $2.44 is a critical level to watch. Therefore, I suggest a short selling strategy with an entry price of $2.47. We will set a stop loss at $2.57 to limit potential losses if the price unexpectedly rebounds. The initial target price will be $2.39, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades within the bands, suggesting moderate volatility. If the price breaks below the lower Bollinger Band, which is currently around $2.39, it reinforces the short selling position. If the price reaches $2.39, we will consider taking partial profits. The final portfolio will be 60% short selling strategy, 30% RSI strategy, and 10% Bollinger Band strategy. This blended approach balances risk and reward, capitalizing on the anticipated downtrend while incorporating technical indicators for added precision. Based on the historical data and forecast, Internet Computer shows a declining trend, particularly evident in the recent forecast prices ranging from $5.11 to $4.85. The RSI consistently hovers below 50, indicating a weakening momentum, and the forecast data suggests a continued downward pressure. The support price of $4.99 provides a key level to watch. Combining these factors, I recommend a short position strategy. Enter a short position at $5.11, placing a stop-loss order at $5.2 to limit potential losses if the price unexpectedly reverses. The initial target price should be $4.99, aligning with the established support level. To refine this strategy, incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential for a bounce. However, the forecast continues to predict a decline. Therefore, after reaching the target price of $4.99, consider adjusting the strategy. If the price rebounds and touches the upper Bollinger Band, around $5.2, enter a short position again with a stop loss at $5.25 and a target price of $4.85. This layered approach allows us to capitalize on short-term fluctuations while maintaining a bearish outlook. This portfolio combines the RSI and Bollinger Band strategies to maximize efficiency. Based on the historical data and forecast, Injective exhibits a clear downtrend. The price has been consistently decreasing from a high of $10.6 to a forecast low of $7.6. The support price of $8.32 has been tested multiple times, but the price has failed to sustain above it, indicating a weak support level. The RSI consistently below 50, with dips below 35, confirms the bearish momentum. The Bollinger Bands are also contracting, signaling decreasing volatility and a potential continuation of the downtrend. Therefore, I recommend a short selling strategy. The entry price should be $8.42. The stop loss should be set at $8.66, just above the recent high within the Bollinger Bands. The initial target price is $7.81, aligning with the forecast price and the lower Bollinger Band. If the price reaches $7.81, consider adjusting the stop loss to break even at $8.42 and setting a new target price at $7.6, based on the forecast. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BTC exhibits a clear downtrend, supported by the consistently decreasing forecast prices for the next week. The RSI consistently stays below 50, with values frequently dipping below 40, indicating an oversold condition. Considering the recent price action, the support level at $211 and the forecast prices, a short position is warranted. I recommend entering a short position at $216. The stop loss should be set slightly above the recent high, at $224, to protect against unexpected upward movements. The initial target price should be aligned with the forecast price of $199, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the bottom band, suggesting potential for a bounce. However, given the overall downtrend, I recommend maintaining the short position. If the price approaches the middle band around $246, consider taking partial profits at $244. If the price continues to fall and breaks below $211, a further short position can be opened at $211 with a stop loss at $215 and a target price of $196. This tiered approach allows for capitalizing on both short-term and long-term downward movements while mitigating risk. Based on the historical data and forecast, THETA network has shown a declining trend, with the price falling from $1 to $0.722. The support price is consistently at $0.772, and the resistance is at $0.833. The RSI indicates oversold conditions, fluctuating between 33.3 and 48.8. The Bollinger Bands have been widening, suggesting increased volatility. Given this analysis, I propose a contrarian strategy focusing on potential rebounds from the oversold territory. My strategy involves a tiered approach. First, initiate a long position at $0.722, coinciding with the latest forecast price and the oversold RSI. Set a stop loss at $0.71 to protect against further downside. The initial target price is $0.78, aligning with the support level. If the price reaches $0.78, consider moving the stop loss to break even to secure profits. A secondary target is $0.83, near the resistance level. If the price reaches $0.83, take partial profits and trail the stop loss upwards. This strategy balances risk and reward, capitalizing on potential short-term bounces while protecting against sustained downward pressure. Based on the historical data and forecast, WorldCoin is exhibiting a downtrend. The forecast data indicates a continued decline, with prices predicted to fall from $0.737 to $0.697 over the next week. The RSI consistently hovers below the 50 mark, suggesting a prevailing bearish momentum, and the Bollinger Bands show the price moving towards the lower band, further reinforcing the downtrend. Given this, my strategy will focus on short positions. I recommend entering a short position at $0.737, placing a stop loss order at $0.75 to protect against unexpected upward movements. The initial target price should be $0.705, aligning with the forecast data. To optimize returns, I'll incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches $0.705, I'll move the stop loss to break even, securing the initial investment. If the price continues to decline, I'll adjust the target price to $0.697, the lowest point in the forecast. This strategy combines the forecast data with technical indicators to capitalize on the anticipated downtrend while managing risk effectively. This approach offers a high probability of achieving substantial returns in the current market conditions. Based on the historical data and forecast, Hooked Protocol is exhibiting a downtrend. The RSI consistently remains below 50, with readings frequently dipping below 30, indicating oversold conditions. The forecast for the next week projects further declines, with prices expected to reach as low as $0.0947. The Bollinger Bands show that the price has been trading within a narrowing range, suggesting increasing volatility. Given this scenario, I propose a contrarian strategy focusing on short-term bounces following oversold conditions. My strategy involves entering a long position when the RSI reaches or falls below 20. For example, when the RSI is $31.7 on April 3, 2025, enter a long position at $0.113. Set a stop loss just below the lower Bollinger Band, for example, $0.11, to protect against further downside. The target price should be near the middle of the Bollinger Bands, around $0.14. If the price fails to reach the target and starts to decline, exit the position at the stop loss. This approach aims to capitalize on short-term rebounds while mitigating risk with tight stop-loss orders. Based on the historical data and forecast, Artificial Superintelligence Alliance has been experiencing a downtrend, with a recent bounce from the support level of $0.429. The RSI consistently remains below 50, indicating a bearish momentum. The forecast predicts further decline. Considering this, I recommend a short position strategy. The entry price should be $0.432, coinciding with the first forecast price. A stop-loss order should be placed just above the recent high of $0.469, to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.391, aligning with the lowest forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading below the moving average, suggesting a bearish outlook. As the price approaches the bottom Bollinger Band of $0.428, it indicates a potential bounce. However, the forecast and RSI suggest continued downward pressure. Therefore, we maintain the short position with a revised target price of $0.397, slightly above the forecast. If the price breaks above the top Bollinger Band of $0.585, it signals a strong reversal, and the position should be closed immediately, cutting losses. This combined approach of RSI, Bollinger Bands, and forecast data provides a robust risk-managed strategy for Artificial Superintelligence Alliance. Based on the historical data and forecast, Polkadot shows a downtrend with a recent price hovering around $4.07. The RSI consistently indicates oversold conditions, fluctuating between 37.3 and 55.7, suggesting potential for a bounce. However, the forecast predicts a continued decline, with prices expected to reach $3.92. The Bollinger Bands show the price has been trending towards the lower band, indicating increased volatility and potential for further downward movement. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My strategy involves a short position at $4.07 with a stop loss at $4.16 and a target price of $3.92. The RSI reading of 41.8 suggests we are nearing oversold territory, but the forecast price of $3.98 supports a short position. The Bollinger Bands confirm the downward trend, with the price near the lower band. This strategy aims to capitalize on potential short-term price corrections while mitigating risk with a tight stop-loss. If the price breaks above $4.16, the position should be closed immediately to avoid further losses. Based on the historical data and forecast, Filecoin shows a downtrend. The RSI consistently hovers below 50, indicating weakening momentum. The forecast for the next week projects a continued decline, with prices falling to $2.65. The support price remains steady at $2.69, acting as a potential floor. Considering these factors, I recommend a short position. The entry price should be $2.74, with a stop-loss set at $2.83 to limit potential losses if the price unexpectedly reverses. A target price of $2.65 is set, aiming to capitalize on the anticipated downward trend. To optimize this strategy, we'll implement a layered approach. Initially, enter a short position at $2.74 with a stop-loss at $2.83 and a target of $2.69. If the price hits $2.69, consider scaling in further at $2.68 with a tighter stop loss at $2.7 and a target at $2.65. This layered strategy allows us to maximize profits while mitigating risk. The Bollinger Bands confirm the downward pressure, with the price consistently trading near the lower band. This reinforces the likelihood of further declines, making this short strategy a high potential opportunity. Based on the historical data and forecast, Conflux shows a downtrend with recent price fluctuations around $0.08. The RSI consistently stays below 50, indicating a bearish momentum. The forecast for the next week predicts a continued decline, with prices ranging from $0.0787 to $0.077. Considering the support price of $0.0784, a short position strategy is recommended. We will enter a short position at $0.0787, placing a stop-loss order at $0.0813 to limit potential losses if the price unexpectedly rises. The initial target price is set at $0.0765, aiming to capitalize on the anticipated downward trend. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests further downside potential. If the price touches the support level of $0.0784, we will enter a short position. The stop loss will be set slightly above the upper band, around $0.0822, and the target price will be adjusted to $0.0774. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. The portfolio will prioritize the short position strategy based on the combined signals from RSI and Bollinger Bands, with a focus on tight stop loss and reasonable target prices. Based on the historical data and forecast, Ethereum name service exhibits a clear downtrend. The price has been consistently declining from a high of $17.9 to a forecasted low of $13.9. The RSI consistently remains below 50, indicating a bearish momentum, with values often dipping below 35, suggesting oversold conditions. The Bollinger Bands show the price approaching the lower band, further confirming the downward trajectory. Considering these factors, I recommend a short selling strategy. The entry price should be $14.8, coinciding with the initial forecast price and the lower Bollinger Band. The stop loss should be set at $15.8, just above the recent support and the lower Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price should be $13.9, aligning with the final forecast price and providing a reasonable profit margin. This strategy leverages the anticipated downtrend, utilizing the RSI and Bollinger Bands to identify optimal entry and exit points, while the support level acts as a safety net. Based on the historical data and forecast, Avalanche shows a downtrend. The RSI consistently hovers around the 40 to 50 range, indicating neutral to slightly weak momentum, and the forecast suggests further decline. The price is currently near the support level of $17.9. The Bollinger Bands show that the price is trending towards the lower band, further confirming the downtrend. Therefore, a short selling strategy is recommended. We will enter a short position at $18.4. A stop loss will be placed at $18.8 to protect against a potential upward reversal. The initial target price will be $17.7 based on the forecast. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will consider covering the short position or moving the stop loss lower. Conversely, if the price touches the lower Bollinger Band, it might signal a potential bounce, and we will adjust the target price accordingly. The portfolio will be a 70% short selling strategy, 20% RSI strategy, and 10% Bollinger Band strategy. The final target price will be $17.7. This layered approach combines trend confirmation with momentum and volatility indicators for enhanced risk management and potential profit optimization. Based on the historical data and forecast, BTC shows a downtrend with decreasing closing prices and a forecast indicating further decline. The RSI consistently remains below 50, fluctuating between 34 and 49, suggesting weak momentum. The price has already touched the support level of $0.0215 consistently, and the forecast price continues to fall below this level, reaching as low as $0.0204. The Bollinger Bands are narrowing, indicating decreasing volatility and confirming the downtrend. Considering these factors, I recommend a short position strategy. The entry price for this short position should be $0.0218. The stop loss should be set slightly above the recent high, at $0.0241, to protect against unexpected price reversals. The initial target price should be $0.0206, aligning with the forecast price. If the price continues to decline, a second target price of $0.0204 can be considered. This strategy combines trend analysis, RSI confirmation, and Bollinger Band signals to maximize potential returns while managing risk. The RSI is below 50, and the price is approaching the lower Bollinger Band, reinforcing the short position. Based on the historical data and forecast, PENDLE demonstrates an upward trend, consistently testing and nearing the resistance level of $3.23. The RSI fluctuates between 45.7 and 64.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been trending above the center line, with recent movements nearing the upper band, suggesting bullish momentum. Considering this, I recommend a long position strategy focusing on capitalizing on the anticipated upward trajectory. We will implement a strategy that combines RSI and Bollinger Band signals. Specifically, we will enter a long position at $3.02, coinciding with the first forecast price and a potential pullback after recent highs. The stop loss will be set at $2.85, just below the recent support and the lower Bollinger Band to mitigate potential losses. The initial target price is $3.34, aligning with the forecast price for April 8, 2025, and a conservative projection based on the resistance level. If the price reaches $3.34, we will move the stop loss to the entry price of $3.02 to secure profits and protect against a reversal. This strategy aims to capture the anticipated upward momentum while managing risk through strategic stop-loss placement and profit-taking targets. Based on the historical data and forecast, the sandbox exhibits a downtrend. The price has been consistently approaching the support level of $0.256. The RSI consistently stays below 50, indicating a bearish momentum. The forecast data projects further decline, reaching as low as $0.248. Considering the downtrend, I recommend a short position strategy. The entry price will be $0.263, placing the stop loss at $0.275 just above the upper Bollinger Band to protect against unexpected upward movements. The initial target price will be $0.25, aligning with the forecast and a significant drop from the entry price. To refine the strategy, we will incorporate the RSI and Bollinger Bands. When the RSI dips below 30, indicating an oversold condition, we will enter a long position at $0.258. The stop loss will be set at $0.255, just below the lower Bollinger Band. The target price for this long position will be $0.265, aiming to capture a rebound. Combining both strategies, we will prioritize the short position due to the stronger downtrend signal. If the price bounces and triggers the long position, we will manage it cautiously, adjusting the stop loss as needed. This combined approach aims to maximize returns by capitalizing on both the prevailing downtrend and potential short-term reversals. Based on the historical data and forecast, Decentraland shows a declining trend. The price has been fluctuating within a range bounded by a support of $0.235 and a resistance of $0.257. The RSI indicates that the asset is currently in the oversold territory, hovering around 40.0. The Bollinger Bands suggest that the price is approaching the lower band, indicating a potential for a short-term bounce. The forecast for the next week predicts a continuous decline, with prices ranging from $0.239 to $0.231. Therefore, I recommend a contrarian strategy, anticipating a short-term rebound before the overall downtrend resumes. My strategy involves a long position with an entry price of $0.233. Given the oversold RSI and the proximity to the lower Bollinger Band, I anticipate a short-term bounce. The stop loss will be set at $0.228, just below the lower Bollinger Band, to limit potential losses if the price continues to decline. The target price will be $0.245, aligning with the recent resistance level. This strategy aims to capitalize on a potential short-term rebound while managing risk with a conservative stop-loss. This approach offers a favorable risk-reward ratio and aligns with the observed market dynamics. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend, with a consistent decline in the forecast prices from $0.0749 to $0.0656. The RSI values have been fluctuating between 30 and 50, indicating indecision and a lack of strong momentum. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for further downside movement. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.0749. The stop loss will be set at $0.077, slightly above the upper Bollinger Band to avoid premature exits due to short-term volatility. The target price will be $0.065, aligning with the forecast price and providing a reasonable profit margin. To refine the strategy, we'll incorporate RSI signals. When the RSI falls below 30, oversold, it signals a potential bounce. However, given the overall downtrend and forecast, we will prioritize the short position. The portfolio will be 70% short position and 30% waiting for the RSI to reach 30 and then enter a long position. This blended approach aims to capitalize on the prevailing downtrend while remaining flexible to adjust to potential reversals. This strategy combines technical indicators and forecast data to maximize potential returns while mitigating risk. Based on the historical data and forecast, Uniswap shows a downtrend. The price has been fluctuating within a support of $5.83 and a resistance of $7.06. The RSI indicates oversold conditions on several days, particularly around 34.3 on March 31, 2025, and 35.3 on April 1, 2025. The Bollinger Bands suggest that the price is approaching the lower band, which could indicate a potential bounce. Considering these factors, I recommend a long position with an entry price of $5.66 on April 9, 2025, coinciding with the forecast price and the lower Bollinger Band. A stop loss should be placed at $5.59, just below the lower Bollinger Band to mitigate potential losses if the downtrend continues. The initial target price is $6.25, aligning with a previous resistance level and a reasonable profit target. To further refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI rises above 60, indicating overbought conditions, we will take profits at $6.25 and consider a short position. Conversely, if the RSI falls below 20, indicating oversold conditions, we will hold the long position, adjusting the stop loss to break even. The forecast indicates a continued downtrend, so we should be cautious and prioritize risk management. I suggest allocating only 5% of your portfolio to this trade due to the inherent volatility of Uniswap. The final portfolio will be 5% long Uniswap with an entry price of $5.66, a stop loss of $5.59, and a target price of $6.25. Based on the historical data and forecast, Chainlink shows a declining trend. The price has been fluctuating within a support of $12.9 and resistance of $14.3. The forecast for the next week indicates a continuous downward movement, potentially reaching $12.4. The RSI consistently stays below 80, indicating that the asset is not overbought, but the recent values have been around 40, suggesting a potential oversold condition. The Bollinger Bands show that the price is approaching the lower band, further reinforcing the potential for a downward trend. Therefore, I recommend a short position strategy. Specifically, I suggest entering a short position at $13. Given the downward trend and the proximity to the support level, set a stop loss at $13.6 to protect against a potential reversal. The initial target price should be $12.5, aligning with the forecast and the lower Bollinger Band. If the price hits $12.5, consider adjusting the stop loss to break even and setting a new target price at $12.4, based on the latest forecast. This strategy combines technical indicators and price predictions to maximize potential returns while minimizing risk. Based on the historical data and forecast, Aave exhibits a clear downtrend. The price has consistently tested and failed to break through the resistance level of $162, while the support level remains at $149. The forecast data further reinforces this bearish sentiment, predicting a continued decline to $139. The RSI consistently hovers below 50, indicating a lack of strong bullish momentum. Considering these factors, a short selling strategy is the most appropriate approach. The strategy involves short selling Aave at $152. Given the current RSI of 36.2, which is near the oversold territory, we will set a stop loss at $159 to protect against a potential short-term bounce. The initial target price is $143, aligning with the forecast data. If the price reaches $143, we can reevaluate the situation and potentially adjust the target price based on further technical analysis. This strategy prioritizes capitalizing on the existing downtrend while incorporating risk management through a well-defined stop loss and a reasonable target price. Based on the historical data and forecast, EOS shows a clear upward trend with increasing momentum. The RSI consistently moved above 50, reaching 80.7 on April 3, 2025, indicating strong bullish sentiment. The forecast data further supports this trend, predicting prices to rise from $0.74 to $0.95 over the next week. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.74. The stop loss will be set at $0.766, just above the support level, to protect against potential downside risks. The initial target price will be $0.822, aligning with the forecast price for April 6, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition. However, given the overall bullish trend, we will not trigger a buy signal. Instead, we will adjust the target price based on the upper band. If the price reaches $0.874, aligning with the forecast price for April 8, 2025, we will move the target price to $0.919. Finally, if the price continues to rise and touches the upper band, reaching $0.95 on April 10, 2025, we will close the position, securing a substantial profit. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Tron shows a sideways trend with price fluctuating around $0.23. The RSI indicates the asset is generally neutral, hovering around 50, occasionally dipping into oversold territory but not consistently. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper or lower bands. Considering this, I recommend a moderately conservative strategy focused on capitalizing on short-term fluctuations. I suggest entering a long position at $0.236, coinciding with the first day of the forecast period and a slight upward movement. Place a stop-loss order at $0.234, right at the support level, to limit potential losses. Set a target price at $0.239, aligning with the forecast peak and the upper end of the recent trading range. To refine this strategy, I propose integrating the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, consider entering a long position at the prevailing price, with a stop loss just below the lower Bollinger Band and a target price near the upper Bollinger Band. Conversely, if the RSI exceeds 80, suggesting an overbought condition, consider a short position with a stop loss above the upper Bollinger Band and a target near the lower Bollinger Band. However, given the current neutral RSI and Bollinger Band positioning, the initial long position at $0.236 with a stop loss at $0.234 and a target at $0.239 remains the most prudent approach. This strategy balances risk and potential reward within the observed market dynamics.